Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Once again, we have prepared the weekly report as usual. And we have come to a very interesting conclusion based on the analysis of the fundamental situation in the European Union and in the United States. So, particularly speaking, we're split report into two parts. Actually, in the first part, we're watching for Fed and its policy and major targets, achievements that it needs to get in the nearest few months. So, what actually Fed needs to do. Fed, I mean, together with the United States Treasuries, of course. And the second part, the European Central Bank. So what to expect from the European Central Bank in terms of the policy and how market treats this overall balance between the United States dollar and European currency. And we have come to a very interesting conclusion there. So we have identified the major sentiment in the market, what the major arguments of the market society, why they think, what they think actually, and why they think that euro currency will start and keep moving higher in the nearest few months. So, and it's this report have appeared to be really interesting. So, at the same time, everything is not stands so as actually market expect to see. Particularly speaking, we're talking about the inflation level, and here we explain why we think that inflation hardly will be low in the nearest time. That also leads us to conclusion and some analysis of the fundamental data from the United States. Actually leads us to conclusion that Fed hardly will stop with the rate rising right in May. So since the Fed will have a break in the meeting in August, we suggest that really to a high degree that we see the rate change in the July and the June as well. So that could drastically change the market expectations and euro currency to United States dollar balance that stands right now. Besides, this policy could return back or establish some Fed confidence that was lost in recent time when the markets not believe Fed anymore. So with these steps, Fed could reestablish, restore some confidence that it has lost. So actually, towards speaking, we divide the expectation period, the forecast period, into times until the June meeting on the 14th of June and after the June meeting. Until the June meeting, it's very probable that that the European currency should stand on the surface, even with some attempts to go higher. It just comes on the current market sentiment. If in your markets expect mostly free rate change to the 3.75 level, and in the United States, the only single rate change now expected to the 5%, 5.25. So, and that puts some additional positive background for euro currency. And this setup should drive euro currency higher. It's different assessment of the possible target of this action. For example, BMO expect 112 area, while the Namur expects 114 area for the euro currency. And both levels have some technical background. So, for example, 114 is a major 618 resistance level on the monthly chart and May overbought level on the monthly chart. At the same time, 112 and 1250 is a weekly confidence resistance and weekly overbought. And mostly, I think that the major difference between these two levels is, depends on what European Central Bank will tell on the 4th of May, on the meeting. If, for example, we get 0.5% change, it is less probable, but it is still not totally excluded from the possible scenarios. It still stands on the table. And if we will get more or less hawkish statement from the central bank, that could make 114 level reasonable. With all other things being equal, for instance, if we will get 25 basis point change and actually some, well, moderate European Central Bank statement. Most probably it's 112, 112.75 might be achieved. So anyway, until the 14th of the June, euro currency probably should keep some bullish sentiment, if of course nothing drastic will happen. And from that standpoint of view, the scenario that we're watching actually on the daily chart and which we were trading on last week mostly has some, well, short-term living. So this is just short-term scenario with a possible deeper retracement to the 108.50 area, but this retracement stands inside of the longer-term bullish trend on the weekly chart. So this is some temporal technical pause in upward direction, some retracement, but inside of the longer-term bullish trend. So we do not treat this as breaking of the bullish trend starting with a bearish trend, but this is just a pullback, tactical pullback. Based on performance on euro currency last week, as you can see, it was a lot of efforts to move higher and trying to move above the 110 area. All of them have failed, and actually you could see that market showing tight consolidation in the shape of the flag, which makes us think that, well, the scenario that we talked about, retracement down here, it's actually valid. So currently, based on the daily chart with the bearish trend, with the forming of the flag, we do not see any reasons to cancel this scenario, and we still intend to keep an eye on. Theoretical invalidation of this scenario stands above the stop. It's a bit far, but it's based on engulfing. As you know, that the invalidation point of the engulfing is around its stop. Although we could say that if market will break the 618 resistance level inside of this downside swing, it probably will be a big challenge on the possible failure of this setup. Correspondingly, on the intraday charts, everything stands mostly the same, not many things to talk about. You probably already saw this picture last week. It's a bit boring, but we will keep working with the same scenario that we have well, actually worked through the whole previous week. You could see Friday performance that we see. All attempts that market would like to do here with the possible upside breakouts, you can see has failed. So it mostly remains in the same range and wasn't able to break it up. And overall performance here is also very choppy. It has no signs of the thrusting action, which mostly stands in favor of the retracement feature of this sideways action. This market is completed the OP target finally here. And well, actually we have some kind of the Gartner's triple to sell, as we already talked about this. That's why on the intraday charts we also have no reasons to deny idea of the possible downside extension here. So let's keep watching. With the possible upward action moving above 110.20, 110.30 area right there, that's probably will turn the favor on the bullish side. So in this case, it's probably bears will start losing control of the market, and in this case we could say, well, probably yes, this will be opposite breakout of the flag pattern, and that will be the bullish scenario. And in this case, indeed, euro currency will get the chances to immediate upward continuation. So that's two moments to keep an eye on. While it stands inside the flag, it keeps chances on the downward action. That's what we have currently. Corresponding on the direction, you could make your trading plans. So if you would like to buy, you have to keep an eye on the possible upward breakout here. If you would like to sell until market stands inside of this range, you probably could consider taking the short position. For instance, once the trend will turn bearish again on the hourly chart, that will be a chance to consider taking the new short position with possible drop to the 108.50 area. So that's our view on euro.